let's talk about gold, silver, their market correlation. We'll throw in copper too, because I do have a bunch of copper positions on. So recently, gold prices seem to be moving in the same direction as the market. That's correct. Does that mean that gold has become positively correlated with the market, or is it still an investment vehicle to hedge against market risk? Gold has always, well, I shouldn't say always, but for much of the time that I've been trading, gold has always been considered one of those hedge assets or flight to quality assets like treasuries. Mm-hmm. When the market would go down, people would go down in a big way. People would run to buy treasuries and they'd run to buy gold. We would call that a flight to quality. Lately, gold's been going up. The market's been going up. So people have been buying all assets. And that's thrown a lot of people off. And so they're wondering, what the hell is this correlation with gold in the market? You know, good question. What do you think before I answer that?
Oh, I think it's completely random. I mean, listen, back in the day, in the 2020s, I answer it as there's no correlation whatsoever. There's no rhyme or reason, zero. If you would have asked me in the 80s and the 90s, I would have said, yeah, there's an inverse correlation to the overall market. So it depends on what bat you want to ask here. No volume in either of those two products, palladium or platinum. So we don't have them.
Makes sense. To answer the question, we conducted an analysis of the correlation between gold and the S&P 500 and examined how it changed over time. Because right now they seem to be positively correlated. I think historically you're not going to find that. Let's go next slide. So the correlation between gold and the S&P 500 has been more frequently positive post the pandemic. However, the current correlation stands at 0.25 with a 4-year average of 0.16. Remember, highly correlated would be 1. So anything above let's say 6.5, 0.7 would be what we would consider correlated or highly correlated. Anything below 0.3 or 0.2 is not really correlated at all. So we would consider both of these to be low to non-correlated. Even though recently there's been some correlation, generally, as you can see here, the 4-year average and the longer-term average is completely, gone the other way. So the answer here is there's not much of a correlation at all. That's just a random happening. Looking at a longer time frame, the 20-year correlation between gold and the S&P 500 is 0, indicating no correlation at all, even during major market crises, such as 2020 and 2008. The correlation remained close to 0. In 2008, it was negative 0.02, and in 2020, it was 0.19. The 20-year correlation is absolutely 0. I think this answers a lot of questions with respect to correlation. 0.
Yeah.
This makes a strong argument that gold is not an ideal product for hedging against the market, nor does it follow the market. However, it is an excellent product for diversification purposes. We're always looking for things that are not correlated. In this case, we think we've found some. Silver, platinum, which again, we don't trade, we're just watching it, and copper, all of these very similar. Maybe not exactly the same as gold, but similar. So the correlations of all these products and the S&P 500 have been considered low over the past 3 years. Gold and silver have the highest correlations, while copper has low correlations with all the others. So you can see the first line, S&P 100, then gold 0.10, silver 0.21, platinum 0.27, copper 0.33. And then their correlation to each other, gold and silver have the highest, but the rest are, gold and silver is 0.78. Everything else is way below that. So in other words, that just means that your copper is not necessarily going to move with your gold, and your copper might not move with your silver, but or gold might not move with copper. And since I have positions on in gold, silver, and copper, I have noticed that every single day. Copper couldn't care less what gold does. And gold and silver, though, are highly correlated. Those are the only two things on that board that are highly correlated. So we found a similar pattern over a 20-year period, confirming that the precious metals have almost no correlation with the overall market. So you can see gold at 0, silver at 0.15, platinum at 0.23, and copper at 0.32. I know people like to talk about the Chinese markets and copper and things like that. We're not doing Chinese markets here in copper, but again, I would be very hesitant to say that those two are highly correlated. I doubt there's going to be too much difference between that and the U.S. markets. Anyway, this is just a really good slide so you can see kind of the correlation over time, and you can see the short-term correlation. Let's go to the next slide. Gold and other precious metals have almost no correlation with the equity markets. This makes them less effective as downside hedges, less effective as flights to quality, excellent assets for portfolio diversification. Among these products, gold and silver are highly correlated with each other, while copper has a low correlation to gold and silver.